Hey everyone, welcome to another episode of the PVP podcast, the show where we talk about real estate, business, and everything in between. So today I have Erwin Zito with me sitting down, and he's coming to talk to us a little bit about his real estate investment experience. And I mean, Erwin, you're actually a Canadian investing in the United States. So, I mean, I'm just getting into it myself, and I'm really excited to have this talk with you. But I mean, before we jump into it, for our listeners, let us know who you are and where you came from.
I've always wanted to get rich in life. I always want to get ahead. And when I had that 9-to-5 job when I graduated university, it wasn't happening.
Despite what they told you, right? Despite what they told you.
No, they didn't talk about like side hustles and entrepreneurship enough in school, especially on the tax side. And then, then someone handed me Rich Dad Poor Dad when I was 25. And like, oh, damn, like the more money I make, the more I give it to tax.
Yeah.
Right. It's like a speeding ticket, right? The faster you go, the more you're fined.
Yeah.
Here, the more money you make, the more you give up in tax.
Punished. Yeah, the more you're punished.
Right. And then the book talks to like businesses and investing in real estate to me is very much like a business including like the tax deductions. I learned about capital gains tax and how it's beneficial. Like, oh, this makes a lot of sense to be a real estate investor. Yeah. So and then I dipped my toe in around age 25. Holy cow. Gee, that's a long time ago. I'm now 47, so I've been a landlord for now 21 years. Man. So I've been, and then I come from a business background, so then I couldn't find a realtor to work with for our family's real estate portfolio. So that's why I became licensed myself in 2010.
Nice.
Just to help ourselves or my own family and some friends. And then the word got out. Real estate was a hit. We were doing quite well with our own portfolio. And then people were asking me if I could service them as well. And I thought, well, I know exactly what I would buy. So if I'd buy it, I'll recommend it to you.
Yeah.
So it's been a long journey of like single family homes and then like small multis. And then as things didn't make sense, like for example, we started in Burlington, as things got too expensive, we went to Waterdown, Ontario got more expensive. It's a nice area of Hamilton. It got more expensive. We kept moving further west, further away from Toronto. Yeah. Did student rentals, did garden suites, did basement suites. So I've done everything under the sun.
Yeah.
Almost $500 million worth of transactions with income properties.
Nice.
Yeah.
Man. Good.
Yeah. So it's been very busy.
Yeah. I mean, like I know I started my career off as a real estate broker. At first, I thought, I had no experience in real estate whatsoever. Like most people don't when they get into it, but I thought it's a good way to like learn and earn while I'm learning. I then transitioned to becoming a property manager before an investor. I too still have, I still have my license, but kind of just like you said, friends and family to, not like the traditional agent where they're constantly doing cold calls 7 days a week and working nights and weekends, but I'm more in the investing side myself. And haven't been doing it 21 years like you, though. I started probably 6 years ago, and I could just imagine some of the things that you've experienced in 21 years. Because when I think about my experience in 6 years, and then compare it to like, what will I experience in another 15, right? But I mean, you started off in the GTA region and everything. And up until what year did you invest in GTA, if you still do invest?
I still do. The writing was kind of like on the wall in about 2023 that things weren't going so well, and I didn't know how long the downturn would last. So I exited close to half of our investment properties.
Right.
And then also I bought in the States in 2024 in Texas. Okay. So, and my advice to my clients going forward is I just show them the numbers. Like, this is what you can buy here. And this is what you can buy in the States. Like, you decide. I can service you in both.
Yeah. Yeah.
And then on the buy side, I have like no one interested in buying locally. On the buy side, we regularly have buying happening in the States.
Yeah. I mean, let's be honest. It doesn't make sense to buy in Canada. I mean, look, 9 out of 10 times in my experience, it doesn't make sense. Numbers wise, if we're talking about numbers, as an investor, we're always thinking about numbers, right? But, and then when we compare, like I've recently got into the US 6 months ago, and it just seems like there's more feasibility, and not only with numbers, but with financing options, creative structures, like just a ton of factors, that come in. All this to say that like, I wouldn't necessarily exclude buying in Canada. I bought a piece of land last month, actually, in Canada. But I think that the deals, when we talked about deals and numbers that make sense, they're few and far between. At least where I'm from in Montreal, which is, when we're talking about GTA versus Montreal is right underneath GTA. So I don't know what your experience is when it comes to that personal preference.
Most of my clients are just regular everyday people with day jobs and businesses and kids. So they don't want to be a landlord, and they generally wouldn't have done enough legwork in order to compete with you for that land purchase, for example.
Yeah.
Right. They just want a side hustle. Basically, they want as passive as possible side hustle.
Right.
And again, just basic financial planning. Look at diversification. You already own your home in Canada. That's likely almost all of your net worth.
Yeah.
So just from a basic financial planning standpoint, to diversify into a different country, into the world, the currency of the world, which is the US dollar. I know there's a lot of on social media that says like it's dying, but I always joke with people like, okay, if the US dollar died, how soon before did the Canadian dollar die?
Yeah. Yeah.
But yeah, so anyway, the US is still well poised to remain the world superpower for forever. I know people talk about Trump, but my properties will still be standing long after Trump is gone.
Oh yeah, for sure. For political climates, wherever you are, US, Canada, they always change, right?
Yeah.
And one thing that, stays in place is real estate.
Mm-hmm.
So it's like you said, your properties will be still standing and have been standing before he got here, and will still be standing when he.
Yeah, and I'm remote buying as well. My clients and I are all remote investing. I don't think any one of my clients has seen their property in person. So that's something that's available in the States, much more readily available than here in Canada.
Yeah. I work with a few people and I tell them, they often ask me like, what should I do? Should I invest internationally or should I invest? And these are people with like either no properties or one property, right? And they'll be like, should I invest internationally? Should I invest locally? And I said, well, my philosophy is learn in your own backyard before you apply the strategy internationally. Because if you don't know how to invest in general, investing internationally you might be like skipping a step. Learn how to invest in your own backyard, right? Because if you could manage a property from 2 hours away, you could manage a property from 5, 6, 7 states away, But if you don't know anything about management, whether you start internationally or locally, you still need to learn. Right. So like I tell people a lot, like learn, in your own backyard, because then it just becomes easier to apply internationally in my personal.
I would agree if the person was self-managing or they're managing the property manager.
Yeah.
But again, for my clients, again, they generally have kids, they have businesses. I had one client I was talking to yesterday, like the last week, like he makes almost a 7-figure income, right? So I'm like, what are you doing with these properties?
Yeah.
Right? Like he's self-managing. Like I don't believe what you're gonna like. No, some of the things that are nice about side hustles is you learn a new skill and whatnot. I was telling him like, I don't see how being a landlord will translate to your software business and you trying to get to like a $10-25 million valuation, right?
Yeah.
If anything, they're hindering you into the bigger game. And then in the States, because even investors like myself with only one property, same with my clients that start with one property with their goals to get to like 5, 10, whatever, we can hire institutional grade property managers, folks with 1,500, 1,000 houses under management in town.
Yeah.
Right. So then the scale and also the way we structure our contracts is if there's no rent, there's no fees.
Right.
So then our PMs are financially aligned with us. So then I don't necessarily need to know how to run the business because they can run it a whole lot better than I can.
Yeah.
Right. Like, for example, I was reviewing a for rent ad for one of my clients by the property manager. And, I'm a local Canadian, small scale. I asked, where's the Kijiji in the Facebook ad? They're like, oh, no, we don't do that. That's where all the fraud is.
Yeah.
Oh, okay. All right. So I'm reviewing the ad as well. And it says, what's this? You require applicants to make 3 times more the rent. So your income has to be more than 3 times rent. I'm like, we can't do that in Canada. That's a human rights violation.
Yeah, that's discrimination. Yeah.
That's discrimination. Oh, no. You should be able to apply if you can't afford the rent. We can't discriminate against those people.
Yeah.
Versus right there is like the second line in the ad.
Yeah. And it's like, it's so funny because I remember that one of the people that I work with is like, oh, I want to rent, this property in Montreal you just bought. I want to rent it, but I only want to rent it to a couple. And I was like, you can't publicly advertise that, right?
Yeah.
Like even just saying
Yeah.
perfect for a couple. Yeah. And he's like, what do you mean? Why not? Like, I don't want, kids, I'm house hacking, right? So I don't want kids, toddlers running over my head. And I was like, yeah, but that's discrimination in Canada.
Yeah.
And if they file a complaint, you're getting the not so nice end of that stick, buddy. And he was all like taken back. And like you said, in the States, it's kind of more like, I want to say looser, but a little bit more, like I said earlier, feasible, right? There's less red tape, I would say.
Yeah, I'm actually trying to think what red tape there is.
There you go. Exactly. Right. I mean, just even evictions. You're from GTA. You know what the
It's
Ontario,
horrific. It's
terrible.
horrific.
Take you a year to get a tenant out. 18 months sometimes, depending on backlog. Montreal, I think it's 6 to 8 months to evict a tenant here. Which, and if they're not paying, and if their rent is $2,000 in 6 months, it adds up. 8 months, it's horrific. And in certain states, 35 days, they're gone. They don't pay on the first within 35 days. So it's like it becomes more feasible to have control over the property, right?
Yeah, you're preaching to the choir. Like I don't see the case for, again, if someone already owns a property in Canada and you haven't diversified outside this country, then I don't see why your next purchase should be here.
Yeah.
And also, like, appreciate that, my client's typical down payment is like 90,000,
Right.
right? What does $90,000 US get you in Canada? Does it even get you a parking spot?
Yeah. Yeah. Which is, yeah,
Right?
I know. It's crazy. And I think that like, I was having this conversation with my fiance the other day. She was saying like, oh, why are you investing in the States? Why don't you invest in Canada? I said, I did. I did. And she's like, well, why didn't you contribute to like our country? I'm like, I do. With 40-something% taxes. You know what I mean? Like I do, I really do. Don't tell me I don't. I do. Right. But like, this is the, and obviously she's not in real estate, so she doesn't understand, but this is the, there's the pros and the cons. And I think that like, it's also been a trend. I mean, you and I had spoken about this to Canadians investing in the Midwest, Detroit and Ohio and maybe Indiana. It's also the trend of Canadians, like they're saturating the Midwest, right? You had mentioned earlier Texas. What led you to Texas?
It was just one of the places I was looking at. I was looking at I was looking at Tennessee, Georgia, and Texas.
Okay.
And then the deal arrived for San Antonio, Texas. And it was just something I couldn't say no to. It was an off-market deal via a wholesaler. Tenant was willing to pay, like, I think it was 8 months rent up front, and they're willing to carry the mortgage. So I can't get away with something like that in Canada.
No.
I think it only cost me $70,000 to close on the deal. And the rent it's been a while now. I don't even look at it because it's so passive. But the rent was like $2,300 a month, and I bought the house for $265. And it's a gorgeous 4-bedroom, 2.5 bath on a pie-shaped lot in a really nice suburb of San Antonio, Texas. So I've been around real estate a long time. I can't replicate this deal anywhere in Canada.
Right.
Yeah. So not based on yield, and also based on how many rights I have as a landlord. Right.
Yeah. Which is huge.
I think like you mentioned about like learning how to invest in your backyard. I think everyone should attend the Landlord tenant, their version of, like, you have TAL in Quebec. I think if you're investing in Quebec, if you're in Vancouver, if you're in BC, attend the RTB. You're in Ontario, attend the LTB. Like, listen in for just an hour. See if you want to be part of that. If you have to understand the worst case scenario, if you're ever going to be a landlord in any of these tenant-friendly jurisdictions, right? Yeah. And then decide if you want to be a landlord, right?
Yeah. I mean, there's a lot of horror stories, man. I follow the news quite often. You know what I mean? Especially the real estate side of the news. And not to pick on GTA, because I do love the GTA as a city, right? But I love Toronto, and everything, but not to pick on it. But the condo market has just completely tanked. And like, people are losing their shirts. And like, literally. And I remember seeing this one, poor gentleman on the news about how his $880,000 condo came in $390,000 under appraisal. And he's on the hook for it. And if he doesn't close, he loses his $80,000 down payment, which is just a regular man, trying to like plant a seed for his kids and generations
Mm-hmm.
to come. And to have to go through that, it must be such a nightmare. You know what I mean? As a regular person, to have to like, I've gone through that. And then there was another article that I saw where a tenant owed $43,000 in rent and utilities, and it's been 12 months and this guy couldn't get him out of the condo. And it's just like, you look at that, and I'm someone with experience, and I look at that and I'm like, I don't want to do that. You know what I mean? Like, I don't want to put up with that. I don't want to
Mm-hmm.
deal with that, just even the financial aspect of it, like the condo market tanking, but not being able to get a delinquent tenant out, right? Like it's just a layer of red tape after the other. It's
Mm-hmm.
discouraging, really. It's discouraging,
Yeah. So make sure you share that with your fiance before she wants to be a landlord locally.
She sees what I go through, man, every day. Like she's like, the phone's always ringing. It's always a problem. You're always stressed. And I'm like,
Mm-hmm.
yeah,
Mm-hmm.
it's a business I chose,
Yeah.
But then, so what does business look like for you now, South?
That's so passive.
Yeah.
Yeah. My PM fees, I hopefully don't offend you, but my PM fees is just over 6%.
Yeah.
Right. And the sales tax is less than here.
Yeah. Yeah. Yeah.
And it's just so professional, and all my repairs and maintenance are less. Labor is a lot less, costs a lot less in the States. Same with materials. Materials cost a lot less in the States.
Yeah.
So it just pains me whenever I have like a local problem, like a washer or dryer, or my handyman now charges me over $100 an hour, versus that'd be like, $25 US in the States. Minimum wage, keep in mind, like minimum wage in Texas is like $7.
Yeah.
Right.
Yeah.
Yeah. So operationally, like it's not much. It's so optimized in terms of the process. It's just so easy. Yeah, because when PMs can build businesses the way they do in the States, they attract a lot more capital. They can do a lot more size. Some of these companies are even publicly traded.
Yeah.
Right. I don't believe we have a property management company that's publicly traded in Canada.
No.
And then if anyone even wants to look into it, like what is the resale value of a property management company in Canada versus one in the States, right?
Yeah.
Yeah.
Yeah. They're not publicly traded in Canada. A lot of them are like REITs,
But that's internal, right? They only trade, they only practice on their own portfolio.
Yeah, exactly. And then they'll pull in together some investors and then, purchase a portfolio. And like you said, right. But there's no publicly traded companies in Canada, property management companies in Canada. REITs, yes, but like you said, it's completely different, right?
Absolutely different. And when we're talking about REITs, like how much it's funny, but like when you look at like CPP, for example, Canadian Pension Plan, because just this past summer they announced like almost 900 million and 900 billion new investment into the Atlanta area to build houses for rental. And so the total investment for that one project was $2 billion from CPP.
Mm-hmm.
And I thought, that's interesting. In the middle of a Trump government where CPP is deploying a lot of capital in the States. And it's actually funny whenever I get flack for being a U.S. investor, buy Canadian, support Canada, elbows up. I'm like, hey, I'm just one small fish. Go complain to CPP. They're building 300 houses right now in Atlanta, Georgia. Right.
Yeah.
And then my next thought is, how much residential real estate does CPP own in Ontario and in Canada, right? So that's a fun Google for anyone. And spoiler alert, it's next to none.
Yeah.
So what does that tell you? Professional investors, our own government with our own dollars does not invest in residential real estate in Canada, basically.
Crazy.
So,
eh?
Yeah, crazy, eh?
Yeah. Crazy. And I think, and I see you online, you share a lot of stuff, a lot of stuff that I agree with, and I think that it's very investor focused, like it's evident you're looking at it through the lens of an investor, right? And which is where some people I find have trouble. Being a landlord and being an investor, in my opinion, is two different mindsets, right? And a lot of landlords and some people that I work with, they have a hard time breaking out of that landlord mentality and, putting on like their investor hat, right? They don't know, how to shift that mindset. But when it comes to like mindset and investing, did you adopt a specific mindset? I mean, I know you said you read Rich Dad, Poor Dad. I feel like I'm late to the party. I read that maybe 3 years ago. I feel like I'm definitely late to the party, but, when was that shift like, or a certain mindset that you adopted, to take on that investor focused lens that you operate through?
Again, I think it's partly just part of my DNA. I've always wanted to get ahead in life.
Yeah.
And then just studying like Warren Buffett, for example. Always a big fan of Warren Buffett, buy what's on value, right? And then I was also a member of the Real Estate Investment Network for the longest time, over 10 years. I collected a lot of words while I was there. And, I always just treated this really seriously. Like I hate losing money more than I like making money.
Yeah.
So because I have that mindset, I need to do a lot of research. And then kind of like you mentioned, like you need to learn to invest in your own backyard. And so one thing that all investors need to think about, especially real estate investors should always think about, is I need to invest in something that's landlord friendly, something that where I strategically have the advantage. Right. So that basically excludes residential for BC, Ontario, Quebec. Right. So I tell people, like, if you're going to invest, like friends and family too, even in private, I say, whatever you invest in, it has to be in your favor.
Mm-hmm.
Right. So if you want to invest locally, you can invest locally. Just do like industrial or retail or office. It's just that it's really hard to find a deal that makes sense.
Yeah.
Right. Like office has just been decimated since COVID.
Yeah.
Right. Industrial just had a massive run up. Right. So that doesn't follow Buffett philosophy. It's not on sale. Right.
Yeah.
So how are you going to make a deal work? Right. So, but again, like you can invest locally. Just start off with whatever is in the favor of the investor landlord.
Yeah.
Right? And then, but like when we go to the States, it's a hell of a lot easier.
Yeah. Yeah. Oh, and there's more abundance, there's more like opportunity. And like people say, oh, there's 10 times the population. There's 10 times the population, but there's also 10 times the opportunity. Like when I'm looking in the States for investments and stuff like that, like I'll give you a great example, PropStream. I'm pretty sure you've heard of the website PropStream, but there is a ton of information available there when you want to skip trace owner's information. I think it costs like $20 for 200 skip traces. And they have names, emails, and they'll even tell you how many properties that one owner owns. Whereas in Canada, if you're not a realtor, you probably don't know how to get this information. You know what I mean? So there's way more abundance. There's way more like opportunity, and it's just ton more feasible, and it's just easier to, like, they are open for business, basically. Earlier at the start of the episode, you talked about taxes, right? And here it's kind of like in Canada, it kind of feels like we're the ones who produce are punished for producing versus south of the border. If you're encouraged to produce, you're encouraged to start businesses, to invest, you're encouraged to, there's incentives. There's like, just even for example, the 1031 exchange is huge. How many people do you think would reinvest their earnings in Canada if we had a similar program?
Oh, when Pierre Poilievre introduced his own version of 1031 exchange in Canada as part of his platform, I was like, that's brilliant.
Yeah.
That would maybe keep my money around.
Yeah.
Again, I wouldn't be buying residential real estate. I would have probably bought a business.
Yeah. But still, it keeps people motivated to invest.
Oh,
right.
Like what I said, like how many people else would be like me? They'd open a business or buy an existing business. Yeah. Right. That is a massive win for Canada and small business and employment. Right.
Yeah.
Right. Yeah. And also, it's just a massive win for the economy as well. So take for example, I know this guy in the States, because intergenerational wealth is so much easier to obtain in the States. When he goes and raises money, his checks are probably twice the size of anyone's checks here.
Mm-hmm. Yeah,
because people are able to keep more money in their pockets, so they're able to invest more. So then naturally you're going to have more economic development. Yeah.
And you're also motivated to invest more, right? Like,
of course,
you're motivated to invest more, because like you said, keep more money in your pockets, right? And so it's kind of like, it kind of almost feels like just for example, capital gains taxes. Recently, they announced that they wanted to raise it, and then they went back on it, and they're hefty as it is, if you ask me. You know what I mean? If you sell something and you make $500,000 equity on it, you're paying capital gains tax, you're left with $350. You know what I mean? It's quite a big hit, and for someone who small-time investors, don't forget, we're not like these property management companies where we're talking about these REITs and, purchasing these large assets and whatever. Like, for small-time investors, and it's quite a hit, and because I think that at the end of the day, people are just trying to get by. Right? People are just trying to, build a nest egg for their kids, and the generations in the futures. And people want more, similar to like you, for example, that mindset, right? You always wanted more. You know what I
Not
mean?
just more, I want to optimize. I want my investment dollar working harder. So
Yeah.
you're talking about like taxes going up. At least that one was canceled. But look at BC. Like they just announced a larger deficit, and they're raising taxes in BC. And it's just hilarious. Like the NDP premier blames Donald Trump for that. I'm
Yeah.
like, hang on. I've been following this story for a long time. How come we don't have any pipelines that go through BC?
Yeah.
Right? That wasn't Trump. That's been like 15, 20 years,
Yeah.
right?
Yeah.
But look at the investment going on in the States. Because folks need to remember, real estate, one of the drivers of real estate prices is people's incomes.
Right.
So not just immigration. But like in take Texas, for example, they're going to benefit from the Venezuelan oil. Tesla attracted a whole ton of businesses, like for example, Tesla and SpaceX. And those people make a lot of money. Right?
Yeah.
There's a Toyota plant near my house. A lot of the microchip AI and general AI investment is going to Texas. So all those people are going to make more money, right?
Yeah.
Who do you want as a tenant?
Yeah.
Right? You want a Canadian where unemployment's going up and our incomes have been flat,
Yeah.
or you want to go somewhere where people are making more money. You have more and more people making six-figure salaries.
Yeah.
Right? Where would you rather have as your tenant? Get this. My new tenant, my San Antonio property, she makes $7,000 a year US as a nurse. That she can afford. She's the only income earner in that house now. She can
Yeah.
afford to live in a 2,400 square foot, 4-bedroom, 2.5 bath house on one
Crazy.
income, and she pays half the tax as us. Oh, and I gave the BC example. Taxes are going up, deficit spending is going up. What's happening in Texas? The governor's trying to cut capital gains taxes and property taxes.
Yeah.
Yeah, where would you rather have your investment dollars?
Yeah, exactly.
This is just business.
Oh, yeah, no, it's simple, right? Like if it makes dollars, it makes sense, right? And obviously, like, and you know, we talk about like I have a few people who have recently moved abroad. One of them moved to Dubai, and you know, let's just take taxes for example, and you know, you make $100,000 in Canada. What's your tax bracket? And then go to Dubai, make $100,000, and you're paying this much per year. $6,000-7,000 of it's not even income tax, it's like a country tax or whatever, right? At the end of the year, just by paying that much less, you're keeping more money in your pocket, and it makes a difference, right? Like your example with the nurse in Texas, it makes a difference, you know what I mean? And it makes sense. And I think that I hope that one day things will start to make sense in Canada again. I'm an optimist. I hope so. I don't know what it would take. I hope so. I mean, but all I see is, you know, I read an article the other day, 1 in 5 people are having trouble paying rent. You know what I mean?
Yeah. Is that a market I'm investing into?
Yeah, exactly. Right. Especially, you know, compound that with landlord tenant boards, right? Like, is that something you really want to put yourself through? And, you know, and I ran into a few people, man, in my career where I tell them I'm in real estate, and you know, many times I heard, oh yeah, I invested in real estate. It's not for me. And well, how come? Oh, I bought a triplex, but the tenants stopped paying and it took me forever to get them out. And I made a mistake on my landlord tenant file and they threw the file out and I had to restart and it cost me an extra 6 months. And it's just like, yeah, of course, real estate's not for you. You know what I mean? Like, of course it's not for you, right? Like based on all that. All those compounded effects, right? Like how do you plan to, and I could tell you this, like I'm in business and there's definitely a lot of bad days, right? But like when you're constantly faced with these obstacles and all this red tape, how do you want to stay motivated? You know, obviously, and this was my building inspector actually that told me this too. He's like, you know, the triplex. And it was just like, of course, you don't feel like investing in real estate anymore after your first experience being that insanely terrible experience, right? So I think that, you know, but I mean, you know, I hope it makes sense one day, you know. Will it? I don't know, you know. Right now, future looks kind of dim, but will it? Maybe, you know. Something's got to give. But until then, right, I'm going to invest where it makes sense. You know, like most recently, I just bought a small building, a duplex in Ohio, but we paid $135,000 US. The appraisal value is, for the rentals, the 2 units comes out to $2,400 per unit. And it's like, sorry, per unit for both units. So $1,200 per unit. And I'm thinking about like, if I take that investment here, first of all, in Montreal, you're not finding anything for $135,000 anymore, not in the last 10 years. And second of all, like if I think about something that rents for $2,400 in Montreal, you're probably paying $700,000 for a purchase price. You know what I mean? And for people who have the investor mindset, I think it's a no-brainer when you look at the numbers,
Yeah.
because you're supposed to see a return, right? You're not supposed to inject money into your investment every month.
And not just that, we haven't even mentioned it as well. Like people need to do an inventory of themselves and also appreciate like for example, like I mentioned, like all my clients have kids. Do you want to be traveling to the property? Like I mentioned, my clients, and I don't think probably not one of my clients has ever seen their property before. So that's kind of my
Right.
point, right? Like you need to keep your time to do what's important in life, which is really spend more time with your family. And then that should drive part of your investment decision.
Yeah. 100%. I think
Mhm.
that, because, like I work with people, we coach and we consult people. And, some people tell me like, I say, well, what's your management plan? Right. And funny thing is that one of the first things I tell them is do like a self inventory. I call it self analysis. Find out what type of investor you are. Are you hands on, hands off? Are you passive? Are you active? And one particular person who had a construction background is like, oh, but I could save a ton of money on repairs because like I could just do them myself. But it's like, yeah, but you work 9 to 5. So do you really want to spend Saturday afternoons at your investment property renovating a bathroom or, changing a kitchen sink or a countertop or, it's not an investment, it's a job.
Mhm. Mhm.
And he had a heart. Oh, it was like, like the light kind of went on, because I saw at that point he was thinking from like a landlord's mindset versus an investor's mindset. Right. And then I said, don't you want to spend Saturday afternoon with your wife or your kid, or at a soccer game or a hockey game? Or like, do you really want to spend your Saturday afternoon at your triplex, changing sinks, dealing with tenants and toilets, right? Whereas, adopting, like you said, people don't even see. There was a point in time where I wouldn't buy a property sight unseen. Now it's kind of like, like the one that we purchased in Ohio. I didn't go visit it. I didn't fly down from Montreal to go visit it, right? Hired my property manager after. But again, I was looking at it through the mindset, the investor lens. So, I mean, I want to ask you, you mentioned you start off Rich Dad, Poor Dad. What other books have you read that helped you with your real estate investment mindset?
Because one that comes to mind is like That One Thing by Gary Keller,
Right.
A Millionaire Real Estate Investor. That's another one.
Yeah.
Psychology of Money. That's an excellent book.
Okay. Interesting.
Yeah, that's a really excellent one. I read Bitcoin Standard.
Yeah.
Yeah. I think that people always need to understand what the basics. So, for example, I have some co-op students here who are taking economics at Waterloo. They're accounting co-ops, but I asked them like, "What are you learning in economics?" And they said, "I forget what they told me." And I asked them, "Do you know what inflation is?" They said, "Yeah, okay, we know what inflation is. Do you know where it comes from?" And my point is like, once one understands what the problem is, one will naturally go seek solutions.
Yeah.
Right, because that's how I arrived at real estate. And that's not how I originally arrived. I thought, to me, at the beginning, it was just an investment. But to look at the bigger picture, to understand that, money printing will never stop, inflation will never stop. It's basically a guarantee in life. Then buying and holding onto hard assets makes a lot of sense.
Yeah.
Right.
Yeah.
And kind of like this conversation you and I are having as well is like, is a piece of real estate better in Canada or in the US? Right. Everyone can make their own determination.
Yeah.
Right. But I know which one is easier for me.
Yeah. No, me too. 100%. Yeah. No. And it goes back to that saying, if it makes dollars, it makes sense. And I was working with some people and they said, oh, like they wanted to invest in a condo in Montreal. And they're like, oh, but if we rent it at this price and we buy it at this price, we'll only need to put in $100 a month for it.
Yeah, that's good on the condos for a
Yeah.
condo.
But it's like, but that's not an investment, right? That's a forced savings account as a way to
Yeah.
look at it,
Yeah.
So I think, so what type of clients are you working with right now?
Most clients are coming to me these days because they want to know what's next. They ask what's next for investment. Now also because I do some wealth planning for people, and then when they show me their portfolios, generally they have a lot of real estate already.
Mhm.
So I actually advise them to be investing in the stock market, because if you look at any wealthy person, And anyone can Google Tiger 21, for example. That's I don't know, have you ever heard of them? Tiger 21? It's a
No.
network. It's like a private network. Sorry, it's not like, it is a private network of the ultra wealthy. To join Tiger 21, you have to have 20 million in investable assets, right? And so what's interesting is that they survey their members every quarter, and then they publish the results. So why wouldn't anyone want? I'm nosy naturally. Who wouldn't want to know what the ultra wealthy actually invest in, right? The ultra wealthy generally invest in about a quarter of their portfolio is real estate, about a quarter of it's in the stock market, about
Right.
a quarter is in private equity. So like pre-IPO type stuff. I bet you all these people have shares in SpaceX, for example, but that's not accessible to me. But my point is that I find most real estate investors are well over 90% real estate. So then from a wealth planning, financial planning standpoint, I tell them you should probably put some stuff in the stock market.
Right.
And then as real estate investors, we like to use leverage. So I recommend the same thing. So we can invest in some stocks, and then we can go get a loan. Normally we get a mortgage, right? So for example, like the investment I'm doing literally right now is I'm deploying 100 grand. I'm going to get an institutional lender to lend me 300 grand to buy more investments with it.
Mm-hmm.
So just like our house, I can just no different than a real estate property. I invest 100,000 down payment, but I control a $400,000 asset portfolio in this case.
Yeah.
So again, it's not for everybody. It's for generally people who can afford the interest expense, but anyone who can do the math understands that a leveraged stock market investment should beat real estate. And
Yeah.
again, without any headaches,
No.
except the market going down.
Yeah. Yeah, but it's also about longevity, right? Like a lot of people, like panic selling is a thing in the stock market too, right? It's a thing in real estate too, panic selling, right? So I think being able to weather the storm and everything, like one thing that COVID did that era there, at least in the Montreal, not at least, but probably across the country, it drove up like there was 2 years where everything was insane.
Mm-hmm.
The rental market, that purchasing market, like nothing made sense. Like I know over here people were paying, $300,000-$400,000 over asking price just to win bidding wars. And I'm
Mm-hmm.
like, that is absolute insanity. I
Mm-hmm.
would never pay $300,000-$400,000. I would never pay more than the asking price, right? Yeah, because, it's just lost equity at that point. You know what I mean? And I think that it kind of like made expectations unrealistic. Whereas now, like we're still in property management here in Montreal, and we see what the rental market's like. And I've seen things that I haven't seen in 6-7 years, which is on one block, 3-4 rent signs, literally 3 different properties that say for rent, for rent, for rent, and certain developments offering 2-3 months promotion just to get the units filled. It's crazy.
And
What I mean?
what age are these buildings?
Oh man, for example, I'm working on a development right now. We're offering 2 months free per signature lease, brand new building 2024, built in 2024. But then I see like older, 4-plexes, 5-plexes, like you go on a certain street, there's like 5 or 6 for sale signs on like a maybe 100-foot block,
Mm-hmm.
which it's just the market shifts. The whole
Mm-hmm.
point is the market shifts, right? And panic
Mm-hmm.
selling is a huge thing for some people too. In the stock market, huge, but in real estate too, it's about longevity, being able to go through a market shift, a change,
Yeah. Which requires cash flow.
which requires cash flow. Exactly.
If you're positive cash flow, you don't have to look at it.
No, exactly.
It's causing you no pain.
Exactly. Right.
Right?
So, I mean,
If your
so like,
tenant's not calling, if you're not having turnover, rent's coming in, like if it's all passive and it's successful, it's you can go back to your life. But if it's something being a pain, tenant's not paying your rent, not returning your calls, you got maintenance issues, and you're dealing with it, that's a pain in my ass. It's
yeah,
not something I'm
oh,
interested in.
100%.
Yeah. Right. So I want to talk to, like you mentioned, investor mindset.
Yeah.
Right. You're talking like the run up in prices, like specifically to condos. It never made sense to me, like
No.
during COVID, because what I was seeing was that pre-construction condos were selling for about a 15% premium to resale condos. So why would I pay that as an investor? I'll pay the resale price,
Which makes
right?
more sense.
Like I don't have to speculate. I don't need the market to move 15% in my favor to break even.
Yeah. Yeah.
So yeah. So yeah,
Yeah.
people forgot the investor mindset and also business mindset. What is my worst case scenario? What is my plan B, C, D, right? Can I close on this property? Can I rent it out? Right?
Yeah, exactly. And huge, like you have to cover all those bases before, right? Because I think that like a lot of people, like I said, that one person saying, oh, if I buy it at this price and rent it at this price, it only need to put in $100-something a month. And I'm just like, that's insanity for me.
And that's a good deal in the GTA.
Yeah.
You know?
And they
My
think it's a
friend,
good deal. Yeah. And it's like, and I'm like, that's just insanity for
yeah.
me. So, I mean, like,
my friend that sold pre-construction condos, when things were getting really crazy, he told me in private, I tell my clients, be prepared for negative $2,000 cash flow a month. Like that's what you have to be prepared for if you're going to do this deal, right? Who's going to do it?
yeah,
And then he's being honest. He's being honest with his clients, right? How many agents were not honest with their clients? Oh yeah,
no,
you
exactly.
just assign it. Just assign it.
Yeah.
You never have to own it.
Oh, it'll
You
go
only
up
need the
in
mortgage.
value. Yeah.
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 Real estate only goes up.
Yeah.
What's the other thing? Ready, fire, aim. Ready, fire, aim. This is a good deal. It's a
Yeah.
good deal. Just do this, sign the paper.
Yeah. Yeah, I know. But again, that's another thing about real estate agents. And again, I have a realtor's license. You had a realtor's license, have a realtor's license. So like it's so hard to find a real estate agent that, there's a term, investor focused real estate agents. And that term I only understood as a real estate agent. I was like, oh, does that mean like, work with people who want to lowball a bunch of sellers, right? But then I, became an investor and I understood that term, investor focused real estate agents. It's a mindset, right? And certain real estate agents, a large number of real estate agents don't necessarily have that mindset, right?
No.
To make investor focused decisions, right? So, and I think that, but again, not taking anything away from real estate agents, right? But being having an investor focused mindset, working with an agent who is an investor focused agent truly helps, because your thought processes are a lot.
Yeah, because we can keep our clients out of trouble. Like
Exactly.
your poor friend that bought the triplex, right? We can insulate my client from a lot of these issues, but not all of them.
No, but
if
we
the client loses their job and can't pay the rent, we're in trouble.
Yeah.
Which is why I tell my clients, don't buy here, buy in the States.
Yeah. So, I mean, what would be your piece of advice for someone who's looking to purchase in the States, a Canadian who's looking to invest?
Some basics. It's got to be cash flow positive. It's got to be landlord friendly. It's got to be an area of growth. Understand also that the States is a humongous area. I've advised clients to start with like, where was somewhere you like to visit? Not Florida, because there's still lots of insurance issues in Florida unless you buy something that's newer. But I'm generally not a fan of buying newer because it costs more, right?
Yeah.
So I'm a value investor. I still follow a lot of Buffett principles. I want to buy something that's on sale, but I also want to buy something that's stable or can be stabilized, and that excludes a lot of Florida. So, like for example, I was teasing a client like, you like country music? Let's go buy in Nashville.
Yeah.
Right. Let's go buy in Tennessee. Right. Because then you can tell your account, you can tell the CRA, I'm visiting my property when you're going to the country music festival or whatever.
Yeah.
And you really should go visit your property. So yeah, a lot. Again, we support all the red states. So like I said, it's almost too much selection. So again, I'd almost start with, where do you have family or friends or where you like to visit? And for example, I had a client who has family in Dallas, like Dallas, perfect. Right? Dallas is the number 2 choice for REITs in the States. It's highly defensible place to invest to your family, to your future self, to your wife, everything. And I had this one client who's in automotive. So I asked her, what's your favorite car manufacturer? She said Toyota. Love Toyota. When someone calls about Toyota, their questions are so minor. Versus they buy another car company I won't name. She says to our staff in the office, you got to put a helmet on because it's just going to be problem after problem after problem. I won't say which manufacturer.
Yeah.
But she loves Toyota. So I said, perfect. We're buying North Carolina where they're building the brand new Toyota plant, right?
Yeah.
7.1 billion investment. Don't quote me the numbers. They've already opened their doors. I think they've already hired 2,000 staff for that place.
Mm-hmm.
And it's Toyota. It's the number 1 automotive manufacturer in the world. They're not going anywhere, right? And Americans love Toyota cars too. I was actually surprised when I was in Georgia. I saw more Toyota Tundras than the North American made trucks.
Yeah. Oh, they're fabulous cars. I'm a Toyota
they're fabulous.
guy. Yeah, I'm a Toyota guy too. Like I love my Camry. You know?
Yeah. So for someone like you, I'd recommend like North Carolina.
Yeah. There you go. Yeah. So
Or I like to joke. I like to say, would you believe that Ozempic can make a lot of money?
yeah, yeah,
Selling weight loss in America?
yeah,
Well, we're going to North Carolina because that's where they're building their expansion plan. $4 billion investment for like 2,000 employees. And what an Ozempic employee makes? They probably make six figures.
yeah,
2,000 new employees that made six figures, and the starter home there's like 300 grand,
yeah.
right? Or to rent your place, right? So again, there's so much selection available in the States. It's really hard to find. Like when I started doing this, there's like a kid in the candy store.
Yeah.
Right. Like I can't find any of this in Canada, let alone in Hamilton where I invest.
Yeah. I know, it's crazy. It's night and day. It's
Yeah.
night and day, man. So
Right. Like the price to suite a basement in my market's like $160,000 for a basement apartment. I can buy a house for that less than that money.
I know. It's crazy. When you look at it, it's absolutely insane how much it makes sense.
It is. And then when people talk about like 51st state, like I'd like, it's just a ridiculous idea. But I tell them, wouldn't you think all the people who can't afford to live here would move to the States then?
Yeah.
Because they have no choice. You can't afford to live here.
Yeah. I mean, I
Right?
wouldn't mind seeing our dollar being 40% stronger than what it is now. You know,
No,
what I
but
mean?
also understand they'll all be adjusted too. And also all your costs will go up as well. But
And-
again, just like we're real estate investors. Imagine if there was a mass exodus of all young people who couldn't afford to live here. Who would we rent to? Who would we sell our properties to? It would decimate our real estate industry.
And you know, like there are like some, like the rental market has taken a hit because, for example, they blocked foreign students at one point, right? And they blocked like study visas, student visas, and now immigration. So like these factors have, especially in Montreal and in the downtown core, you know, we have where the McGill University is here, we have what we call the McGill Ghetto. And like I have some colleagues who have some properties there, and they're saying like they would rent to students, rooms to students, and they would make a killing. And now there's less students coming to study, and they've got rooms vacant, and they're making 30, 40% less per year what they were making, 5-6 years ago, right? So I think that it's huge thing to consider. You know what I mean? Like
Huge.
all this, it plays a factor in everything, right? In everything.
Absolutely. I shared an infographic on my Instagram the other day, just yesterday. The population in Canada went up 34% between 2020 and 2024, right? That's like double any European country.
Yeah.
My point is that how much more immigration do we expect to see
Exactly.
going forward? And
Exactly.
so we're probably going to lose one of the main drivers of real estate prices here in Canada. So do you really want to buy another property here versus,
Yeah.
So I'll probably just I'll hold my remaining portfolio, hopefully pay it off one day so I can actually cash flow, or I may sell some of it along the way.
Well, this has been a great conversation, and I had a lot of fun. Thanks again for coming on the show. Unfortunately,
Thank you for having me.
Yeah, man. No, thanks again. And I knew this was going to be an awesome conversation, and wish I would have had more time to dive in deeper. But we'll probably get together for a second one of these for sure.
Yeah, I'd love to.
Near future, and to hear what's been going on. But for anyone listening who could relate, who might want to work or invest through you or just connect with you, how could they reach you?
My podcast is a good way to get a sense of our vibe. So my podcast is called Truth About Real Estate Investing for Canadians. Been doing it once a week since 2016.
Nice.
So we're probably not far from 500 episodes, each an hour long. So they can find me on all Apple, Spotify. My name is really easy. It's Erwin Zito. It's so unique. So if you find me on social, you can DM me there. I may not get back to you right away, but I'll eventually get back to you.
Amazing. Well, Erwin, man, thanks again for coming on and having a chat with me. I appreciate it. And for anyone listening to the show, wherever you're listening to, be sure to like, comment, follow, or subscribe. Until next time, we'll see you guys soon.